Hi, everyone. Friday, February 24th. And though there's a monsoon outside my office right now, we still persist. We still move on with three things with Spyglass Lending. Thank you for joining me, where we delve a little bit deeper into the mortgage and real estate related industries. Let's get right to it. Right off the bat, my brethren are here to tell you we're still optimistic about the next 6 months. Now, it's interesting because obviously this survey was taken more towards the beginning of this year, certainly not in the past week or two, but there was a nice little drop in the interest rates. They had been declining for quite some time, and there was some reprieve. Well, unfortunately, as we know, the last 2 or 3 weeks, they have really screamed back upward. So I wonder how many of these same people in the mortgage industry feel as optimistic. But hey, we're always optimistic people. I know I am personally. I work in the private money space. So in that realm, I feel pretty good about that, right? There are a lot of investors coming back out of the woodwork. They're looking for deals a lot more, and a lot of them need cash out a lot of their portfolios for a number of reasons, a lot more than they used to, and that's commercial and residential alike. But in the QM space, it's interesting to think about this. Even though this optimism abounds, close to 85% of all mortgages currently on the books right now are less than the going rate, the going interest rate, right? So many people in 2020, 21, and 22 either refinanced or moved and made the decision at that point. And those rates that are locked in are less than what the going rate is now. So now you have to find people who have to move more than want to move, or need to refinance more than want to refinance. And we'll see. There is this optimism that the rate is going to come back down and settle into the fives towards the end of this year. But we know right now we're nowhere near that. We'll see how long this optimism lasts. Which brings us to number two. And we love to talk about construction on this particular video segment. And here we are again. It's worth always paying attention. It's a huge barometer for what's going on in the economy. And let's see it again. We are woefully underserved with how much inventory is in the market. And unfortunately, beginning of the year, we're seeing it again. Housing starts are down. There should be rubber stamping going on across this country and getting it done, but it is expensive to build. And a lot of the developers are concerned what they're going to get stuck with in a declining housing market. What's it going to look like a year or two from now? You talk about optimism. They're not nearly as optimistic of what they're going to sell for on the back end. And unfortunately, the housing starts are down, but it should be 3 times, 5 times what it is right now. And that's really what's keeping the market up. The fact that there's no inventory, the interest rates have gone up enough, and unfortunately they're continuing to go back up again. So there should be a pretty sizable drop. You should be seeing it in the real estate market, but you're not. Why? Well, the inventory, and it's kind of a standoff. It's got to break sometimes. So we'll see which way it goes. And number 3, and this is an interesting one. The chart on the left is showing you. Go back to June, July of last year, 2022, and you could see, hey, was there a huge return to the office? Did that happen? No, not really. And it's showing you some sectors and the percentages of people who did return to the office at that time as the pandemic was really easing up. Well, here we are, and it's kind of making a prediction in that same chart. Return to the office, don't bank on it. Well, now you can see bottom right here, from Yardi, and this is just a couple days ago, the office of stress set to pick up in 2023. So there has not been this huge attendance increase, and it's going to be unlikely through this year. And well, that's worth watching, and what effect it has on commercial real estate, especially that sector. So thank you for joining me. This, of course, has been 3 Things with Spyglass Lending. We'll do it all again together next week.